Hello and welcome to the Airline Weekly Lounge. I'm your host, Gordon Smith, and I'm joined as usual by co-host Jay Shabbat. In part one, we're making sense of the latest numbers from Singapore Airlines, and in part two, we preview IAG's full year results. Hi, Jay. How's it going?
All right, Gordon. We got a review and a preview today, right?
A review and a preview. You're going to have to say that with a slightly southern accent for it to sound good.
A review and a preview.
Review and a preview. We're starting off with Singapore Airlines because we're very much in review territory there, Jay. We had the numbers as we're recording here on the 24th of February, out in the past few hours. So they're still fairly fresh from the team in Changi. For anyone that doesn't want to go into huge levels of detail or they haven't already read through the Singapore numbers, give us the headline figures.
All right, and I'll preface that by saying that Singapore Airlines, they do report their results quarterly. So we do have the numbers for October to December now. They don't really do much beyond just publishing their financial statements for this particular quarter. They will do a more comprehensive kind of earnings call / review. I won't even say earnings call, but management will give a presentation locally, and that they tend to do just twice a year. So just wanted to be clear that we don't have too much beyond the numbers, and some modest commentary, a few comments about some of the latest trends, which we'll talk about. So what do we have here? Singapore Airlines did very well in last quarter, 14% operating margin, and that's up from 12% for the same quarter last year. So they finished 2025 very strongly. The couple things to know: the cost did go up by about 3%, but then revenues went up by almost double that, about almost 6%. So very good revenue environment. And it's really not too much of a mystery why, and nor is it terribly new, the phenomenon here. And that's the famous P word now. Basically, when premium is doing well, Singapore is doing well. So, next time you're at a airline-themed dinner party and Singapore Airlines comes up as a topic, you can sound smart in saying, well, tell me, you want to know how Singapore is doing? Tell me how premium is doing. And of course,
you know me, Jay, every Friday night I've got my airline themed dinner parties.
All right. Yeah. And you're all invited. Come on, let's Friday night. So it's in Lisbon this week. So.
Well, I almost feel like this podcast could be like you close your eyes, you get a steak in front of you, a glass of red wine. You could basically be at the dinner table with me and Jay. How about that?
Stop making me hungry. I'm losing my focus. Back to Singapore Airlines. So they do premium. Obviously, we know from, anybody who's listened to even an episode or two of us talking or have read our newsletter, you'll know that that premium has been booming, doing very, very well over the past couple of years. So Singapore Airlines kind of sitting in that sweet spot in the market. They did pretty well for the full year as well, the full calendar year. They had a 9% operating margin. It's a little bit down from 10% the year before, but still, that's a pretty solid year, 9% for these guys. So they do. We talked about the premium doing very well. Should also mention that the Singapore economy has been doing very well, and a big reason for that is they are very exposed to some of these AI, artificial intelligence investments that are happening. So, if you think about these really expensive semiconductor chips to train the AI models that are getting exported to the US and to, around the world, a lot of the components for that and parts for that, Singapore has a big role in that whole ecosystem, and that's helped their economy a lot. Big in some other healthy sectors too, like pharmaceuticals. And interestingly enough, AI, pharmaceuticals, those are two very large sectors of the U.S. economy where tariffs never were applied. So they kind of escaped the whole tariff nightmare that's all playing out right now. And those, sure enough, those two industries are doing well. Singapore Airlines Singapore, the economy there is very exposed to that. So big help to Singapore Airlines. Now they are, talking about trade and tariffs. About 11% of their revenues come from cargo. So they are exposed to that. And it's not that cargo has really been bad across the airline industry. And again, a lot of air cargo is exposed as opposed to like sea cargo. A lot of air cargo is some of this like high value stuff that's related to IT products and pharmaceuticals. So that's kind of been spared some of the tariff drama, and so it's held up reasonably well. But Singapore Airlines definitely did mention that the tariffs have paid at least some toll on the cargo business. Their cargo revenues and yields actually went down year over year in the quarter. So that part of the business is not doing all that great. What else? Singapore Airlines?
Well, if I can extend the metaphor of our dinner party, I wonder what music we will be playing at the dinner party. The mood music, you might say, because a cursory glance at some of the news wires today, Jay, Reuters taken as one, they said that Singapore Airlines' third quarter profit dives nearly 69%. There's language around that doesn't sound quite so positive. You're sounding more upbeat. Maybe for some of our newer listeners or those who aren't quite so tapped into the industry, or frankly, those who are just confused that you've got one source saying, died by 69%, that sounds terrible, and you're sounding more optimistic. Bridge that gap for us. Why is there a reason for optimism here, despite some of those quite shocking headline numbers?
Excellent question. Those headlines can be very misleading, so be careful when you read, particularly in a non-trade publication from a journalist who may not be, particularly familiar with the details of really any company, but in this case, an airline. The net result last year for Singapore Airlines was kind of bumped up a lot by just basically special items, accounting items related to their merger of Vistara, which they own part of. They merged it with Air India. So we had like a big bump last year. That doesn't exist this year. So it looks like, wow, it's a big fall, but you really, to get a good sense of what's going on with the business, you have to look at the operating results. And it's not that the net isn't important. The net's going to include not just the special items, it's also going to include, interest on debt. And obviously, if you're a heavily indebted carrier, which Singapore Airlines is most definitely not, but if you're a heavily indebted carrier, of course, it's something you want to look at if you're analyzing the company. But if you look at the operating results, you'll get and exclude any kind of special items, you'll get a better sense of what's going on. And as I just told you, the operating results clearly show that Singapore Airlines had a very, very good quarter, very solid 2025. And in fact, their quarter last year was better this year than last. So 2025 versus 24. So yeah, great question there. I did want to say one other thing though about their net result. Even ex special items, the net result last quarter and even last year was weaker than maybe Singapore Airlines would have liked for a meaningful reason beyond just special items. And the reason why there's a drag there on that net result. And again, we're not talking about year over year comparisons or anything like that. We're just talking about, how did they do last quarter? They do have a lot of losses coming in from Air India. So those are accounting losses that are booked and not on the operating level, but they're booked in net. And that's kind of a drag on their net profitability. If you think about, so I'll back up a sec and talk a little strategically here. So Singapore Airlines, for decades now, they've always been a profitable airline. They used to be a lot more profitable, going back, let's say before the 2008-09 financial crisis. They kind of ran into some trouble in the 2010s, mostly because of just super heavy competition from low-cost carriers, from Gulf carriers, from Chinese carriers, et cetera, et cetera. Their margins were positive, but not very impressive. And then post-pandemic, they wound up really through a variety of reasons, restructuring their costs, and a lot of their competition went away, et cetera. The premium boom, they're actually doing much better now post-pandemic, 23, 24, 25, and into 2026. So Singapore Airlines, for all, it's just going back decades, they've always had this kind of nervousness about being too exposed to premium, too exposed to Singapore, itself, the Singapore market. And so, one thing they did to diversify away from just premium is that they started, this low-cost carrier called Scoot back, whatever it was, a decade and a half ago. I can't remember when. And that's been, it doesn't break out the profitability of Scoot. I assume it's okay. I can't imagine it's very profitable. Probably performs some useful functions and holding back, low-cost competition. So they did that. And then the other thing they wanted to always do is to diversify geographically. They've, for many years, looked at buying assets in China. China Eastern was a rumored takeover target or investment target, let's say, for many years. Then what they wound up doing is going into India, and very high potential market. But it was like, I'll use an analogy here. It's like those television shows where they the couple shops for the home, the real estate, the family will go around and what do they call, home hunters or home buyer hunters, whatever it is, and they'll look. Well, let's take a look at this home in a nice neighborhood. Maybe this home in a nice, more of an up and coming neighborhood. What Air India is a fixer upper. It's one of these properties that really needed a lot of work, but it was very much in an up and coming neighborhood. I mean, India's potential economically is so strong, potential aviation wise is so strong, that Singapore Airlines decided, hey, let's buy this fixer-upper. But if you buy a fixer-upper, you're going to be exposed to a lot of headaches.
You got to fix it.
So far, the headaches have been much more than the benefits. Will that change over time? They hope so. But obviously, the big Air India accident last year, the tragic crash in Ahmedabad, was a big setback to their turnaround. I think you've maybe written some about their turnaround as well, Gordon, and spoken with their CEO, if you have anything to say there. But, I just want everybody to know that so far they made a big bet there on a very tainted asset. And the bet so far is not bearing fruit.
Not bearing fruit. We started this conversation, Jay, with Singapore Airlines and all the benefits that AI brings in terms of artificial intelligence to the cargo division and everything else. And now we're ending our conversation, at least for this part, with a more negative AI. So AI giveth, AI taketh, be it Air India or be it artificial intelligence. You can see what I did there. But yeah, I
think Air India should use that more in their marketing.
Wow. Yeah, I'll let
I don't
you
know. Maybe I'm not sure. I think not be able to live up to the hype, but
we peaked a couple of weeks ago with our marketing idea for Saga Class.
The dental chair.
Yeah, I had a few people reach out to me on LinkedIn, just slide into my DMs saying, that's not actually a bad idea. Anyway, speaking about India, just wanted to highlight we don't have Campbell Wilson joining us this year, but we do have Peter Elbers, who you cannot describe anything around Air India without talking about Indigo. Peter Elbers, the CEO of Indigo, will be joining us at the Skift India Intelligence Summit. That's in Delhi on March 26th, so not too far away. It is by invite only. Go to live.skift.com for all the details there and to be considered to come along and join us. It's going to be a senior event, but the agenda is looking really, really top class. And I'll be there as well, if that helps grease the wheels at all, Jay. Much more on that in the coming weeks. What's that?
That's reason enough to go.
Reason enough to go, yeah. Looking forward to that one. Before we go to the break, you got anything else to add on Singapore Airlines? A little bit more detail, I expect, in the Airline Weekly issue this week.
Yeah, well, we'll have more on the earnings. I guess the only thing worth mentioning here, in addition, is that they have been very aggressive in forming partnerships and alliances. There was once a time when they were a little bit standoffish about that. They didn't like alliances so much. They said, our product is superior, which, they put a lot of money into the product for sure. It's has, internationally well regarded. So they always had that attitude like, well, we don't want to ally with an inferior airline in terms of their product, put our customers on it. But that's totally not their attitude anymore. They, work very closely with a bunch of different airlines, including, All Nippon in Japan and Air New Zealand and Lufthansa and et cetera, et cetera. And they're doing a lot more partnership activity locally within the ASEAN region. So Singapore's neighbors. So if you think about Indonesia, giant market, in terms of population, they have a new joint venture with Garuda Indonesia. They also have one in formation with Malaysia Airlines. And they work, I think, with Vietnam Airlines a little bit as well. So they really have their hand of friendship extended, let's say, to airlines throughout the world.
Before we head into the break, we're joined by a skifter that you might not be so familiar with, and that's Adam Stacey. He's a senior editorial events and awards producer. Whew, that's a big title. And he's currently working on the Skift Idea Awards. Adam, welcome to the Airline Weekly Lounge.
Thank you very much. Glowing introduction.
For the benefit of listeners who aren't familiar with the Idea Awards, what are they all about?
Yeah, so Skift Idea Awards, we're just moving into our 8th year. So the awards were launched really to recognize and celebrate the most impactful ideas across travel, just the entire ecosystem. But I like to think of them as the travel industry's innovation benchmark. We all know we're at the pivotal moment of transformation for the industry, structurally, technologically, operationally. And these are awards about spotlighting the companies and leaders who are actually driving that change. So, I'm talking about things like advancements in customer experience, AI, digital transformation, sustainability, product design, all that good stuff. And what's important with the awards as well is that it's not necessarily about scale. So we're open to everyone because our focus is about impact. So we see submissions from startups, mid-sized players, global brands, individual leaders. I always like to think innovation doesn't correlate with the size of the company. It correlates with the execution and the results that they're putting out. And that's what we are recognizing with these awards.
Totally agree. Sometimes it helps if you're a little bit more nimble, a bit smaller. You can be a little bit more disruptive than a very large corporation. But what would you say, Adam, to an Airline Weekly Lounge listener who says, that all sounds great, but where do I fit in?
Yeah. And I'm not an airline expert, so I'm not going to tell people what to do. But I think for this audience, we have an obvious category, which is airlines and airports. Is specifically designed for that industry. That could cover anything from cabin innovation, distribution strategies, emerging advanced air mobility. We're seeing all this stuff with flying taxis and this crazy stuff. But we also have categories specifically for technology. So, this industry specifically is deep into AI deployment. We're focusing on revenue optimization, workforce planning, retail transformation, data-driven personalization, and sustainability as well. That's another area where this industry is focused on. So fleet strategy, emissions tracking, new planes, all that stuff. So we're looking for initiatives really that just demonstrate tangible progress and are bettering the experience for the end user and the industry as a whole.
Sounds great. And if anyone's still unsure, I believe you got a quiz as well.
We do. Our marketing team, I like to call them the best in the biz. They've come up with a quiz that you answer a couple of questions and the quiz will tell you basically which categories are the best fit.
Amazing.
One new thing we've launched this year as well is that you can actually download a sample form before you submit. So, if you're entering on behalf of a client maybe, or you're not quite sure what the submission forms looks like, you can just download a PDF sample and take a look in advance.
Super, super helpful. Okay, you've got everyone interested. What is the call to action? Where do they go next if they want to apply or learn a little bit more?
Yeah, so the next step is to just head to the website, which is hosted on live.skift.com, and then you just follow through to Idea Awards. As you mentioned, we've got a quiz. You'll find all of the categories, the sample PDFs, judges, previous winners, if you're curious to see who's made it in the past, and all of the relevant timelines. The submission process is very straightforward and streamlined. It's all done remotely via our online system. You can buy now at the lowest rate and continue to edit up until the entry deadline in July. So there's no, huge time commitment there. And one thing I would say is, even if you're unsure about whether your project or initiative will qualify, is worth exploring. Some, from speaking to past winners, some of the most compelling have come from projects that they didn't think would be a good fit, and then they've gone on to win. So yeah, if you've got a smart solution that solves a real world problem, take a look. We'd love to hear
Take a look. Fantastic. Yeah, sounds great. Thanks again for coming on the show, Adam, and telling us all about it. And I can speak for myself. For the Global Forum in New York last September, we got to see for ourselves many of the Idea Awards winners, and they are from right across the industry. It's not always who you might expect. So yeah, do check that website out, live.skift.com, where you find all the details for the Idea Awards. Just scroll down to the bottom of the page. You'll get all the info there. Thanks to Adam for joining us on the show. And listeners, hang around, because we'll be talking IAG right after this short break. Hello and welcome back to the Airline Weekly Lounge. I'm Gordon Smith, joined as usual by co-host Jay Shabbat. Part 1, we were discussing all things Singapore Airlines and a few other associated companies. We're now moving our attention to IAG, because as we're recording here on February 24th, we've got the IAG results coming out on Friday, Jay. And they aren't just any old quarterly results. These are the annual figures. So as we do head into those full year earnings from the International Airlines Group, Jay, what's the single most important number that you're looking for first? We discussed the importance of looking at context, looking at detail, excluding special items, other elements when we were discussing SIA in part 1. What will you be looking for at IAG? Operating margin, unit revenue, guidance? What number is the one that you go to immediately when you get that market filing in on a Friday morning?
Yeah, you said it, the operating margin.
There we go.
That's the one that you can basically use that to compare across different airlines. And the operating margin for IAG has been extremely strong over the past couple of years. And in 2024, for example, IAG had a 13% operating margin. That was better than Delta, better than United. And it was, is Lufthansa, just for example, was 4%, and Air France was 5%. So you could see those three, Europe's big three. We've got IAG at 13 and the other two at 4 to 5. So they're just running away. They're just running away in the race in terms of profitability.
And not just one good quarter, Jay. That's annual.
That was annual. And so far in 2025, they've just been keeping up the pace. They had in the third quarter. So of course, this is a European airline. It's going to peak in the summer. You're going to get higher numbers, but IAG had a 22% operating margin in the third quarter. And that's, again, like 13% for Air France KLM, 12% for Lufthansa. So these guys are just way ahead of the pack. Iberia in particular, and I wish we had more time to, go. We'll have to do a podcast about just Iberia one of these days, because super fascinating turnaround story there over the past 20 years. I mean, I remember when I, first was working on Airline Weekly here, back in the early 2000s. Iberia was a real basket case. I mean, it was its financials were bad. It had a outdated product. Its fleet was outdated and old. Its IT systems, revenue management, distribution was way outdated. It was just getting eaten alive by low cost carriers on the short haul. And it had like all the wrong planes in long haul, these 4-engine A340 gas guzzlers. When IAG came in, basically after the British Airways merger, they basically cleaned it up in a spectacular way. And Iberia, I said that IAG had a 22% operating margin in the third quarter. Well, Iberia alone had a 24% operating margin.
Ooh, that's enough to make O'Leary blush.
It's enough to make O'Leary blush. Let's see, what did O'Leary have? I'm looking at my trusty spreadsheet. Well, he had a 36 this summer, so he's fine. We don't have to. Don't send him any roses or anything. Sympathy roses, or he's fine. But all right, back to IAG. So I want to talk about today why IAG is so strong, why they're doing so well. And of course, that would be a topic that Gordon, if at the dinner party on Friday, I'm sure we're going to be talking about this. And we're going to spend the whole hour just talking about why that's the case. And, we'll talk about their competitive cost base and, the London Heathrow capacity constraints that really help, British Airways with their yields. We talk about, the loyalty program is going well, and the old Spanish and British colonial empires that, foster so much traffic between Spain and Latin America and the United States and India to the UK, whatever. So I just gave a bunch of them, rolled off a bunch there. But I want to focus on two today, what I call the two T's. Are you ready? The two T's.
The two T's. Go ahead.
So the two T's are the transatlantic market and tourism. And so the transatlantic market, we know, has really been booming, and there's no bigger transatlantic market in the world than London, UK, London. So British Airways has really benefited from that enormously. And then if you think about not necessarily the biggest market, but the hottest market in the transatlantic, well, Spain has certainly been one of them. You could throw Italy in there, you could throw Greece in there, but it's these, Mediterranean markets. And we can see, Gordon, I think I sent you some numbers this morning. I don't know if you have them in front of you, but do you have those numbers I sent with looking at the change in capacity for different transatlantic markets by country over the past 2 summers?
I'm looking at them right now.
Yeah, you want to share some takeaways from that. I looked at that and it's like, okay, wow, there's a big divergence here. Yes, the transatlantic market is booming, but some are booming. The boom is not created all equal here.
Absolutely right, Jay. So we are looking at some Cirium Dio data, and we're comparing Q3 2026 with Q3 2024 in terms of seats and the percentage difference in seats. This is all focused on the origin country. If we look at even the top 5, Jay, so again, no spoilers here. Number 5 is Spain, then Italy, France, Germany, and the United Kingdom. Even within that top 5, there's marked difference. So Spain in 5th place is got 21.1% improvement in seats. So going from around 945,000 in Q3 of 2024, that shot up, smashed the 1 million mark, 1 billion, that would be a new story, the 1 million mark to just over 1.1 million for Q3 26. Italy follows a similar trend, up 24.5%, growing from 1.1 million to more than 1.4 million. And then things kind of steady Eddie in France, a 3.2% uplift there to 1.7 million. And then things actually in negative territory for Germany, down a fraction of 1%, 0.6% to be precise in Germany. And then things a little bit more sharply down 4% for the UK. And of course, that being the largest origin market, that makes all the difference. A loss of 148,000 seats comparing those 2 quarters, but still the largest overall in terms of Europe at 3.5 million there, Jay. So there are quite a few other interesting markets. Ireland's up a good chunk. Iceland's well down. But I thought those top 5 would be a good place to start to show that it's a patchwork. It's not a doom narrative, with everything that's going on in terms of the geopolitics and the economy and everything else, tariffs. But equally, it's not universally positive either.
Right. Yeah, those are super interesting numbers, I thought. With the exception of maybe Ireland, where just a ton of Americans are, going, it's a pretty easy trip to do from a place like Boston or New York. It's not a far flight.
And a decent amount of corporate as well, actually, going into Dublin these days.
Yeah, you have the corporate too. And I think the corporate is really helping with London too and BA. But in terms of just volumes, and again, this is seats, this is not passenger flows, but there's going to be a correlation here. It's where the real boom is Southern Europe. It's not Northern Europe. So it's the Spain, as Gordon mentioned. It's Italy. It's Greece, which is up 28%. It's a little bit further down the list here because it's smaller. But that's where the boom is. Whereas, yeah, you're Scandinavia, you're Germany. Not a whole lot going. They're probably decent markets, but Sweden, for example, I think United actually pulled some of their Newark flights to Scandinavia. Sweden is down 27%, or this summer will be. And again, just as a reminder, as Gordon said, this is going to be versus two summers ago. I pulled up the 2-year trend. But yeah, very much a Southern European boom. So British Airways is still getting it, not only through connections, but also, as you said, like the business demand to London is just kind of its own thing. And the Heathrow, constraints and all that. They're doing very, very well in London. Aer Lingus is getting it. We talked about, Ireland being the exception, huge boom there. And then Spain is just, is getting it like a waterfall. I mean, it's really, they're just in a fantastic position. I mean, Spain is kind of the superstar economy of Europe over the past couple of years. And the reason it's the superstar is because of one particular superstar industry, which is tourism. And IAG, Iberia have just been, and Vueling, been in just the right place, the right time for that. The population is growing in Spain because they're, a very rare country these days in the West. It's actually, immigration is actually increasing. A lot of it is coming from Latin America. Iberia always says, Madrid is the new Miami. Everybody from South America is coming over to visit Madrid now. A lot of, business investment, et cetera. Those markets, very, very strong. South America to Madrid, even some to Barcelona. They have some of that now too. So yeah, again, just a lot going right on the IAG side from both the tourism and the transatlantic, the two T's. Is this going to be another boom year, particularly for Southern Europe, or is there going to be some, is that not the case? Yep. There are some pressures. There's definitely some emerging pressures coming out in that market. I mean, some of the strength from the point of sale US is under pressure because the dollar is weaker versus the euro than it was, and versus the pound than it was. So that's one element of, let's just call it one headwind. We also have, I think, increasing weakness going the other way, Europe to the US. I think we've heard that from Icelandair. We've heard that from Finnair. We've heard that from Air France KLM, actually.
Yep. Yeah.
One thing we've heard from KLM for sure is that inbound, or the sort of that sixth freedom traffic that flows over those European hubs into the US is way down. So all that stuff going from Africa, Middle East, India, through, Amsterdam. I mean, it's not really going to go through Madrid. Some of it does go through London. I mean, a lot of people are scared to connect through London because it's London. It's, it's very congested, but they do get some of that, India to the US. So listen for that. Is that down for IAG as well? And I guess the, kind of the other wild card potential headwind is the World Cup this summer. Is that going to be a net negative? Because that sort of tends to throw off a lot of normal traffic flows. They will be, a lot of people going, but maybe not a lot of business people going. So they may be, emptier business class cabins, premium economy cabins. I don't know. So, but something to listen for when you're tuned into the IAG call.
Thanks for that, Jay. That's the Jay Shabbat IAG crib sheet for the Friday earnings call. Lots to listen out for there. And as we said, much more details come in the upcoming issues of Airline Weekly. And if you're not already a subscriber, go to airlineweekly.com/subscribe. And a reminder that as an Airline Weekly subscriber, you get access to all the airline news on skift.com, plus Skift Research's airline reports. So loads of value there. Skift aplenty. airlineweekly.com/subscribe. And before that, before we wrap up, brother, a quick reminder to send any questions or comments that you might have for us to podcasts@skift.com. That's podcasts with an S at the end. And please don't forget to follow or subscribe to the podcast wherever you're listening or watching. And if you are enjoying the show, please rate us 5 stars or leave us a positive review so we can continue to spread the word about the Airline Weekly Lounge. Right. Jay, thank you for joining me this week. Loads of other numbers coming in. I know we've got Air New Zealand, we've got Norse, we've got JetBlue, not all of them publicly traded, but certainly a lot of data points, if nothing else. Etihad as well, we had today a lot more numbers to get crunching through. So I'll let you get back to that.
Volaris, with all this stuff in Mexico going on.
There we go. Yeah, for sure. Volaris as well. So many data points to get diving into. So we'll head back to that. But in the meantime, thanks to Jay for joining me. Thanks as always to our producers, Jean, Monica, and Will, and wherever you are in the world. Thanks for listening, and we'll catch you next time. Bye for now. Whether you're listening to us on Spotify, Apple, or wherever you get your podcasts, please remember to subscribe, rate us 5 stars, or leave us a positive review. This really helps us get the word out about the Airline Weekly Lounge, so we can continue to bring you this podcast every week, absolutely free of charge. And if you're watching us on YouTube, be sure to subscribe to the Skips channel and hit the notification bell to find out whenever a new video drops.